we always say that Wall Street's rigged. It's rigged in our favor. Like and it pisses me off when people say that Wall Street's rigged for like institutions and hedge funds. It's not. It's rigged in our favor. Wall Street still today, their best alpha, the very best alpha that Wall Street has is access to credit card data. And they've had it for like a decade. So I have this data now, right? So like they get all the credit card data and they know what people are buying and selling in like weeks behind. So like they know what people are buying and selling 2 weeks ago. Like not selling, what they were buying in stores. But the data is dirty. It's not that great. It's not even that reliable. That's the best data they have. But we have better data than them. We have data that they are not willing to even look at. And it's data that they wouldn't even know what to do with because it just their heads don't work like this. So I had a company, Ticker Tags. We were the first social data intelligence company for hedge funds. So I taught hedge funds how to interpret social data, conversational data. Like, so when I say social data, what I mean is conversational data, people speaking to each other, real humans speaking to each other about what they're doing that night, where they're going out, what they want to buy, what shoes they like what movies they like. That data is so rich, and it is the gold standard for investors. Because what do people do before they buy something? They think about buying it. They talk about buying it, right? They converse with their friends on social, and specifically the gold standard I tell everyone for the last 6 years has been comment data on TikTok videos. Because back in the day, I used to analyze Twitter, and my intelligence platform, we had a deal with Twitter where we basically had 10% of all the tweets in real time, and we created an index of 1.4 million word combinations that represented every brand and product on earth and anything that could be spoken that could be relevant to a publicly traded company. And we would monitor the volume of conversation around that topic. So I can tell you if people were starting to talk about that thing that you just mentioned, right? More than a month ago or a year ago. I can tell you if people are starting to talk about the iPhone or how many people talk about the iPhone in the 7 days before its release compared to the 5 years before that in that 7-day period. So using conversational data to measure interest in granular topics that are really important to publicly traded companies. So that's data that anyone in the world has access to. Just go on TikTok and start reading comments of trending videos. Literally, just do that. That's what I do. That's how I'm generating all this money. I'm reading comments of TikTok videos. That's my alpha.
What are some of the things that you're seeing right now that, like, smaller things, like before we go into robots and give us small examples?
Also, if the average viewer out there wants to try to take something away from this conversation and implement it in their own investing strategy, would they go and make bigger sized plays on fewer companies or more plays on more companies? Like, how would they implement this? That
doesn't matter so much. Like, how you trade doesn't matter that much. Everyone focuses so much on the It's all about alpha. It's about finding information that other people haven't found out yet that's meaningful to a publicly traded company. It's that simple. So I think Crocs are crashing right now. So I'm shorting Crocs. I believe that Birkenstocks are doing really well this holiday season, so I'm long Birkenstock. I believe that e.l.f. Cosmetics is doing better than the market thinks they're doing right now, so I'm long e.l.f. I believe that Nike's not doing so great right now, so I'm short Nike. So I won't be right on all this stuff, but I'm getting this mainly through conversational data. I can see what people are talking about. I see how they're talking about it. I see where the buzz is. Vans are doing really bad. Vans is, the company that owns Vans, VF Corp, also owns North Face. North Face isn't doing too good right now either. And so they're trying to pull a turnaround, but the turnaround isn't working because I'm evaluating people speaking about Vans and no one's speaking about Vans. It's just not happening. So I'm short VF Corp. So these are kind of some of the little trades that I'm involved with right now that might only last a few weeks. And no, I'm not putting 10% of my portfolio on them, but this is more historically what I've done, right? Fun trades I've talked about in the past is there was a time about a decade ago when women started to transition from wired bras to bralettes. bralettes are bras without wires in them. Victoria's Secret made their brand on wired bras. Bralettes cost about 1/3 of what a wired bra cost. The margins are much lower, and Victoria's Secret didn't even sell them when they were coming into style. All right. So it was hugely detrimental to Victoria's Secret when women wanted unstructured bras without wires.
How do you know this? I mean,
because I see people starting to use the word bralette. And I said, what is the word bralette? Oh, okay. Now, once you see it a little bit, then you start researching it. Then you start researching, and you're like, oh my God, a lot of women are talking about bralettes. In fact, at the time, they were talking about either wearing bralettes or no bras. This is like during that no bra. So it's like, it was like this error when people didn't want push-up bras, because Victoria's Secret built a reputation on wired push-up bras, which were really popular for 20 years, right? And so this is really detrimental for that brand, because one, they were late to start selling bralettes. And then even when they started selling bralettes, the market for bralettes were so cheap and the margins were so thin that every customer that bought a bralette instead of a bra, they made less money on. So they were getting killed from every angle. So if you're the first to detect that change in the world and then connect the dots to who's going to win, who's going to lose, who was the winner? Aerie. Aerie was one of the first brands to start selling bralettes. So they benefited from the bralette trend. Victoria's Secret was harmed by the bralette trend. So that's a really weird random example, but I have about 80 of those over the past 18 years. So the past 8, when you say, Chris, how did you turn, I've generated, I don't know, 70 or 80 million or $90 million from $20,000 over 18 years, right? And the weird part is that if it wasn't for all those gains being short term and me paying taxes every year, like on all those gains, and me pulling so much money, I pulled almost all my profits out every year to invest in startups and private companies. If I would have just left all that money in my brokerage account and maintain those returns, that 20,000 today would be like $1 billion at least, I think. So, but you ask, how do you do that? I did that from roughly 75 trades that happened over 80 years. The bralette trade, this trade. Oh, e.l.f. I just talked about e.l.f. My first e.l.f. trade was when Jeffree Star, who's a beauty influencer, did a YouTube video talking about their e.l.f. putty primer, which is a $7 putty primer. I know you guys don't know what primer is, but
it's
putty
a
primer.
Makeup.
Yeah. So
it's what you put on first, right?
Yeah. So e.l.f. was this really junky brand that they only sold in drugstores, pharmacies, CVS and Walgreens, right? It was a junky brand. And Jeffree Star comes out and does a video and says, this $7 putty primer is as good as this $50 putty primer. And he did this whole video. You know how many views it got? Like 12 million views. So you know what I did? I went to the Walgreens by my house and I just stood there, right there by the putty primer, by the e.l.f. I just stood there. And all day long, moms came in and girls came in and they would just go, oh, why are you here? We saw the Jeffree Star video. Oh, cool. I watched. They didn't just buy the putty primer. They bought the putty primer and then they would maybe get one or two other things from e.l.f. Because all of a sudden now e.l.f. is like a cool brand because Jeffree Star said it was cool. So I actually went out and I found the Wall Street analyst that covered e.l.f. and cosmetics brands for one of the big 4 banks. And I called them up on the phone just randomly. I'm like, hey, I know you cover this sector. I just want to ask you, have you seen the Jeffree Star video? He's like, who's Jeffree Star? I hung up the phone. That's all I needed to know. Right. So it's like Wall Street didn't even know. They don't watch YouTube, right? These guys, these sell side analysts at Goldman and B of A, they're not watching Jeffree Star makeup videos on YouTube. I am. That's where I get my alpha. Okay. So that's how you do it. That's how you do it. So e.l.f. was $7 a share, $7 a share. And I went all in on e.l.f. And unfortunately, I exited most of my e.l.f. at about 14, which is like a couple months later. It almost doubled pretty much in like a few months. And the funniest part about it was that on the earnings call, they called out the e.l.f. primer putty. And it was a primer putty, primer whatever. I was like, man, it was so cool and that's what I call the point of information dissemination. So I invest at a point of what I call information imbalance. When you have information that the rest of the world doesn't have, at the point of information parity, when that information has been disseminated amongst other investors in Wall Street, sometimes that could be through an earnings call. Sometimes it could be because an analyst did finally pick it up. Or sometimes it's because the credit card data starts showing big charges. And then Wall Street picks it up and they start trading it. Have you ever noticed that stocks sometimes move like a week or two before earnings? That's the credit card data that Wall Street's trading. So I actually spend six figures on data every year. So I've spent hundreds of thousands of dollars to buy institutional data, the same data the hedge funds buy. But I don't buy it to trade off of it. I buy it so I can see when they're seeing what I saw earlier. And that's when I know that the information I saw is now being reflected in their data. So my window is closing, and that's when I exit.